Okay, let's go and start locate some patterns, consolidation patterns and candlestick patterns. Let's look for candlestick pattern first. Let's go back some time, see what we got down here. Take a closer look. Okay, I'm looking for some lower shadows. Let's see if I can find the hammer. We got one here, interesting hammer. Testing some of those moving averages. There's support right here at 670, the low on this day. Nice reversal, follow through. Let's see if we find this right here. It's a Harami. We haven't studied that, but this is a nice reversal pattern as well. Bearish engulfing. Right there. This is almost a hammer, not quite, but looks like, except for this big, slightly longer shadow, it is a hammer because the lower shadow is longer, it's twice the size, more than twice the size than the body. So these do qualify as a hammer. And let's see, what else do we find? Long-legged hammer, very long. So the longer the leg, the longer the shadow, the more powerful is the reversal. Because this was at one point, this was all red, all the way down here, testing those lows down here. But the bull stepped back in and brought the price up all the way to basically where it started. So the bulls had a lot of control over price action right here, and here look what happened. So the bigger the shadow, the stronger the reversal. And look at this massive reversal. He went from 1177 all the way up to 1700, 1800. And when did you sell? Up here, when the bullish engulfing appeared. This is a bullish engulfing. This is time to take profit. Period of consolidation. But this is such a powerful currency that this was just like a couple of days of taking profit. Price came back all the way down to 1600 and then moved above the moving average, the ATMA, and ready to go for another ride. Here we have an inverted hammer. Again, we have a little bit of a shadow, in this case below. Hammers should not have shadows, but currencies act a little different than stocks, so a little shadow is fine. And so this was sell, this was the sell signal, so the second run all the way up here. And when you start seeing the formation of this pattern, take the profit, close the position, and price retraced, came down to 1900, and then was ready to reverse again. So you had 3 days of a pullback. Another bearish engulfing, hammer, period of consolidation, price moving below the moving averages. So moving averages act as areas of resistance and support. When price touches the moving average and bounce up, like in this case, tells us that the bulls are there, the moving average is holding price up, is a support, and then expect price to move higher. It did here for some time. And the line I always look at is the orange line. The orange line is the ATMA, and the ATMA tells us about the short-term trend of that particular currency or equity. So as long as the price closes above the ATMA, stay long. When price closes below the ATMA, exit the position. And I'm looking at the daily chart. I'm not talking about intradays, daily chart. And then you see here there's a crossover, the 50, the blue line, it's holding, 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 and then right here price closes below it. So this was the indication that if for some reason you were in this trade as a long, close the position because things are going to move lower. Or exit or enter a short position by selling the course, sell, by selling the currency, sell, yeah? And then price came down. Now this Bitcoin is very powerful, so we know the price went ballistic. So every pullback was an opportunity to re-enter. See? This is also a hammer and followed by bullish engulfing. Beautiful. See, so those patterns will repeat. When you start recognizing the candlestick patterns, it's going to be easier to apply it to the chart. And then you use candlestick pattern, and you use moving averages. See, makes it easier to understand what's happening with market, with price, how to get in, how to get out. Okay?